The concept of transitory is really this. It is that the increases will happen. We're not saying they will reverse. That's not what transitory means. It means that the increases in prices will happen, so there will be inflation, but that the process of inflation will stop, so that there won't be further. When we think of inflation, we really think of inflation going up year upon year upon year upon year. That's inflation. When you have inflation for 12 months or whatever it may be, I'm just taking an example and not making an estimate, then you have a price increase, but you don't have an inflation process. And so part of that just is that if it doesn't affect longer-term inflation expectations, then it's very likely not to affect the process of inflation going forward. So what I mean by transitory is just something that doesn't leave a permanent mark on the inflation process. Again, I don't mean that producers are going to take those price increases back. That's not the idea. It's just that they won't go on indefinitely. So to the extent people are implementing price increases because raw materials are going up or labor costs or something's going up, the question really for inflation really is, does that mean they're going to go up the next year by the same amount? So you're going to be in a process where the inflation process gets going, and that happens because people's expectations about future inflation move up, and we don't think that's happening. There's no evidence that it's happening. All the evidence is that it's not happening. But nonetheless, we have to watch this very carefully because this is, we have two mandates: maximum employment and price stability. Price stability for us means inflation averaging 2% over time, and so we've got to be very careful about that, but I think it's a good...
Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible Bullion giveaways like this one.
You know the drill. SD Bullion is giving away a box of 500 new 2021 Silver Eagles that could have your name written all over it. But if you don't enter, it could go to someone like Silver Steve here. And while we like Silver Steve, he really doesn't like to share. So click the link below for your chance to win.
Click the link below to enter your chance at winning this 2021 SD Bullion Type 2 American Silver Eagle Coin Monster Box giveaway of 500 Silver Eagle coins. Official sweepstakes rules can be found at www.sdbullion.com/sweepstakes. Good luck to all of you who enter and for your chance to win. Silver and gold both closed the week slightly higher. The silver spot price is in the mid-25 per troy ounce range. The gold spot price sold off a bit to close today's trading, but finished well above the psychologically important 1800 level by a decent margin. The gold-silver ratio rose intra-week, but broke back down to 71. To start this past week, we witnessed one of the most ridiculous errors in CME Group COMEX silver warehouse reporting. One of the COMEX-approved warehouses fat-fingered or mistyped a comma instead of a period into their eligible COMEX pile adjustments. In doing so, they inferred that they added just over 1.5 years global silver supply with a few silver-laced misplaced keystrokes. I know this because I spoke directly the following day with my contacts at the warehouse, and they confirmed it was an error indeed on their part. This 1.2 billion ounce silver reporting error dwarfs the LBMA's March 2020 124 million ounce reporting error. Kudos to the guys over there, though. They were quick to react and admit their error, whereas the LBMA arrogantly took about a month to finally tell the entire silver market that they had indeed made an error. And while the COMEX silver warehouse reporting data, it was quick to be corrected by the next day. How the CME Group, with their CEO making over $16 million a year and median employee salaries at about $150,000 per year, how they do not have protocols in place to catch this kind of obvious human error is disconcerting, to say the least. It makes one wonder how many human reporting errors like this go unnoticed, and for how long, and then perhaps get reported by the CME Group's COMEX team for long durations of time. Remember too, we learned earlier this year from the Metals Focus report on silver shortages in London that over half of the supposed kingpin of the silver market, JP Morgan's COMEX pile, is basically double counted ounces that supposedly back up the largest unsecured silver ETF called SLV that they themselves are the custodian for. One must think back to what Kyle Bass mentioned in 2011 and how supposedly one day, perhaps price will solve everything.
When I talked to the head of deliveries for COMEX and NYMEX, I said, well, what if like 4% of the people want delivery? And he says, oh, Kyle, that never happens. We rarely ever get a 1% delivery. So, and I said, well, what if it does happen? And he says, well, price will solve everything. I said, thanks, give me the gold.
A high-quality silver derivative versus physical bullion demographic was released this past week by the Sharp research team at Singapore's Bullion Star. They note that for the year 2020, over 234 billion paper derivative ounces of silver were traded between the London and New York COMEX markets. That is over 240 times the amount of physical silver that got mined for the same year, 2020. Here's how ridiculous a level of leverage broke out between the two suppressive price discovery systems, and based on the reporting underlying ounces, which I showed you is often double counted between the two organizations. Now here's how this level of leverage works in terms of keeping silver prices in a polite range for the vast majority of the last 50 years of time. This is the price of silver at the bottom, aggregated inside New York COMEX trading hours, the black colored line. Beginning in 1970 with the price point at $1.92 per ounce, the rolling intra-New York COMEX silver futures price has dwindled down to a mere 21 cents an ounce over the last near 51 years of time rolling. The red spot price line shows the silver spot price dip we saw in the middle of this past week when silver dipped below 25 per ounce when I pulled this chart out. The blue line is aggregate silver price data traded outside New York COMEX trading hours in the last 51 years of time. It has rolled and added up to nearly over 230 per ounce now. Here in the year 2021, and since the year 2011, we have been in this fifth era where the blue and red lines have diverged. Each of the prior 4 times in which these lines reconverged, it happened with a rapidly escalating silver spot price and value. This next, the fifth convergence, the reconvergence of these two red and blue lines, should become the all-timer for silver. Now turning to the gold market, here's a look at how reported official gold bullion buying by central banks looked for the first half of 2021. Now this World Gold Council chart doesn't take into account that an additional 70 metric tons of gold bullion was bought or is being bought by the Russian Sovereign Wealth Fund this summer. In terms of the timing on how long this 21st century bullion bull market is taking to play out versus the miniature 1970s version, on a time scale, it's taking about 2.5 times longer for gold to do its manic revaluation upward, accounting for the massive amounts of fiat currency issuance outstanding and created since the last time it did so in the early 1980s. In terms of when is silver going to break out, having been stuck in a year-long sideways trading range it's been in, I can't tell you with certainty when that's going to occur. What I can show you is that in the 1970s silver bullion bull, we also had a massive U-cup that silver had to grind through and break beyond 6 fiat Fed notes per troy ounce before going into its manic exponential phase, multiplying over 8 times in just over 1 year of time following the breakout. So how long will it take to not only get past 30, but again be banging on the door of 50 per troy ounce and finally blow through that level? Well, using the 2.5 times longer duration the 21st century version's taking versus the prior 1970s model, the year 2023 might be on time for silver's manic exponential phase to blow off and roll ahead. For now, we end this week's SD Bullion Market Update looking back at Australian analyst Mr. Barry Dawes in Q1 2021 as he dropped truth bombs on CNBC regarding how cheap $30 an ounce silver is in medium and longer valuation terms. To those of you out there, thank you for watching, and as always, take great care of yourselves and those you love.
The actual value of silver to me is a lot higher than $30 or $28. It's much higher. Silver is still well below gold in terms of its price, and certainly well below palladium, and many other commodities over the past 10 or 20 years. Silver's been a real underperformer. And one of the reasons I think it really has been underperforming is that there's so much activity in the market. And if we look at COMEX at the moment, we've got well over 200 ounces of contract silver versus each ounce of deliverable silver. So people are playing in that market and probably holding silver down. But the real issue, as you've spoken over the last 10 minutes or so, we've had a dramatic increase in the amount of money in the system. We can focus on the United States, but we know it's global, and we should have had to date a much stronger move out of gold to reflect all that, because it really is debasement of the currency at the end of the day. We'll see silver outperforming gold for all those reasons. Silver is very, very good in electricity conductivity, and we're looking at solar cells and the way that improves that the demand Indeed. For it is growing for specific reasons. So there's enough reasons out there for silver to be worth a hell of a lot more than it is today, and the technicals are starting to suggest that it should be much higher than it is now.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content. Give us your thoughts in the comments below. Let us know what you think and which topics you want to hear more about.